you got the central banks that are continuing to go on a gold buying spree. They see what is coming. And yesterday morning in Shanghai, when the market opened up, $112 an ounce higher premium gold spot than in the West. They understand what is coming. They are trying to siphon all of the gold, all of it, out of the West and move it towards China. You have to do what the biggest, most well-funded but well-informed investors on the planet are doing, and that is continuing to accumulate. The central banks purchased another 77 tons in August. It's a 38% increase over July. Over and over and over again, we keep saying the biggest money in the world is doing this.
In today's volatile economic landscape, the words of financial experts like AndySchectman, CEO and president of Miles Franklin, take on heightened significance. Schectman emphasizes the necessity of preparing for potential financial chaos, pointing to a confluence of economic, financial, and geopolitical trends that signal an impending crisis. He cautions that traditional financial instruments may not offer the security many assume, underlining the importance of diversifying one's assets outside the conventional financial system. Schectman's concerns are echoed by Richard Snow, a strategist at Daily FX, who notes that gold's prospects are on the upswing due to declining bond yields, a moderating U.S. dollar, and escalating geopolitical tensions. A weaker dollar, Snow suggests, benefits gold prices by making it more affordable for non-U.S. buyers. One significant factor contributing to these economic uncertainties is the ongoing conflict in the Gaza Strip. Analysts predict that the struggle in this region is far from over and will continue to send shockwaves through financial markets. This war is expected to profoundly impact crude oil and gold prices, causing them to rise in tandem with the tensions in Gaza. AndySchectman reiterates the importance of holding precious metals like gold and silver in the current economic climate. With the Western financial system appearing fragile and transitioning to a different financial landscape, Schectman expresses his confidence in the resilience of owning these metals, even in the face of market fluctuations. Moreover, global monetary authorities have shown a renewed interest in gold. In the first half of 2023, they made net purchases of 387 metric tons of the yellow metal, following an unprecedented acquisition of 1,083 tons in the previous year. This heightened interest in gold underscores its role as a store of wealth, not merely an investment, as recognized by central banks and commercial institutions. Schectman highlights that amid this environment, central banks and commercial institutions are increasing their holdings of gold, recognizing its intrinsic value as a form of wealth in a world marked by financial turbulence. Before diving into AndySchectman's interview, subscribe to our channel and give this video a big thumbs up.
Behavior of gold and silver. First of all, gold and silver represent more than just wealth. They represent the antithesis to the Western system, the frailty of the system. But the big money, the sophisticated money, the central banks, the commercial banks, they understand what it truly is. It is wealth. But because, as I've shared with you and your audience before, when I started this company, my father told me I'll buy some gold and silver every 2 weeks. It's the only rule that I have to follow. 33 years ago when we started this company, and I told you that I've honored that promise to him, even though I own the company, I've honored that promise and have purchased every 2 weeks for 33 years. I've never missed a 2-week period. To me, it is wealth. It's not an investment. And yes, I'm very hyper aware of its ups and downs, but it doesn't bother me because to me, it is my wealth. And when I take a step back and look at the risk involved in owning dollar-based assets at this stage of the game, bottom of the ninth inning, maybe, in a Keynesian system that has failed and is now being exposed, and we can see the transition to one based moving away from debt instruments and promises to commodities and hard assets and transparency, it becomes very easy for me to feel comfortable with these ups and downs, to look at the downs as the stupidity of the West giving me and the East a subsidy to accumulate real wealth. That's the way you need to look at it. It's not an investment. It is wealth. And in times like we face right now, where all the things I just mentioned spinning faster and faster, one of them is going to break. Don't know which one. Probably one that we're not even thinking about. And when that happens, there's no time to blow up your life raft. You're in the water already. And I say this stuff, and I hate being pessimistic about the future. There's a fine line between pessimism and realism, but it's time to put on our big boy pants and realize that the world is moving in a direction that is rather different from what we've experienced over the last 20, 30 years. I mean, there's been chaos forever, right? I'm not naive to say that every generation doesn't have their own chaos, but this one seems a little bit more acute, a little bit more accelerated, and a little bit different, at least anything that I've experienced in my 53 years. So yeah, I think it's never been more important to accumulate metal right now, because I don't know where else to put your money that gives you liquidity, safety, flexibility, and the ability to pick it up and go if you have to, wherever that go may be. But to me, I take great comfort in it. And I hope one or two people out there who are listening to this too, and I'm not talking my book, I'm trying to be as sincere as I can as a father of 3 kids. I think it's time for people to wake up that things are going to start to get worse before they get better. And we haven't even seen the problems with the banks yet. Wait, before the end of the year, this will be our topic. And one last thing, and then we'll talk about the special and let you run. I think the nastiest buzz phrase that we will all grow to hate over the next several months or years will be counterparty risk. The ability to remove that counterparty risk is something that I find very valuable about gold and silver, as Doug Casey has made famous, is saying gold and silver are assets that are not simultaneously someone else's liability. This will become a big problem as the economy gets worse and things get worse. People will not be able to service and or uphold their end of the bargain. So yeah.
Since the beginning of 2022, global central banks have been on a gold buying spree, a trend that appears set to persist as nations seek to diversify their reserve holdings away from an over-reliance on the US dollar. State Street Global Advisors suggests that this move reflects concerns over an excessive concentration of reserves in the dollar and indicates a broader shift in global financial strategy. China, in particular, has been actively boosting its official gold reserves. According to the State Administration of Foreign Exchange, China's gold holdings expanded by 840,000 ounces in September, reaching 70.46 million ounces. This marked the 11th consecutive month of increased gold accumulation by the nation. Andy regards this surge in central bank gold purchases as a significant signal of apprehension among some of the most powerful and well-informed investors. He emphasizes the importance of heeding these warning signs, cautioning that complacency may not be the wisest approach in the face of such notable developments.
The pension industry is a ticking time bomb. Look what happened in the UK. They had to come in and reverse course for tightening and to go back to accommodating just to save the pensions. And the same thing will happen here. You will reach a point where, as rates continue to rise, as these pensions face greater and greater strain, pensions are in big trouble as the economy slows. Or how about the fact that in your 55 and older community, ask people one question: do you know what a bail-in is? Most people don't. That was written into law. If you are in the system and you are entrenched in dollars and in the system, you're in big trouble. There is no safety anymore. FDIC, the coverage that everyone relies upon, has 125 billion in assets backing 18 trillion in deposits. The whole thing is upside down. Look, you got the central banks that are continuing to go on a gold buying spree. They see what is coming. And yesterday morning in Shanghai, when the market opened up, $112 an ounce higher premium gold spot than in the West. They understand what is coming. They are trying to siphon all of the gold, all of it, out of the West and move it towards China. Well-funded but well-informed investors on the planet are doing. And that is, central banks purchased another 77 tons in August. It's a 38% increase over July. Over and over and over again, we keep saying the biggest money in the world is doing this. And I think that if you are not a contrarian, as our friend Rick Rule says, you're bound to be a victim. This is time to start reevaluating even the best laid plans. Sometimes need to be reevaluated, and this is one of those sometimes. You got Rick Santelli on CNBC, who's not a right-leaning guy. He's very moderate. In fact, I like him a lot. I've met him a few times. Smart dude. He's saying 10-year Treasury could go to 16% by his calculation, by his charts. I mean, really? What happens when you have 18, 20, 21% mortgages? What happens? Don't know. How about the fact that the U.S. has come closest to defaulting, maybe the closest they've come to defaulting in decades or in ever on their debt? And again, kicking the can down the road further and further. Or the fact that we remove a Speaker of the House for the first time in history. Or now this awful war, the second war that we're now involved in Israel. and with Palestinians. I mean, it's breaking out, and the U.S. is now sending aircraft carriers and airplanes to defend Israel. How about the fact that the mortgage rates have hit the highest level since 2000? How about, or what happened in Ohio, East Palestine, Ohio? How about OPEC with their voluntary production cuts, more and more and more production cuts, and oil at the highest level ever, since, over $95 a barrel, highest level in quite some time. On top of that, household debt, mortgages, auto loans, all record high, record student debt, which is our biggest asset of this country, $1 trillion in credit card debt. Look, everywhere you look. Or how about the fact that in the last 18 days, $444 billion was added to the national debt. It took us till 1975 to accumulate our first $500 billion in debt. We did it in the last 18 days. So when you talk about things spinning out of control, and again, they are. And I don't know where the next point is that breaks, but if you're just focused on one simple thing, or you just think that everything will be okay, you're not paying attention.
In light of the growing emphasis on gold as a hedge against economic uncertainties and the increasing interest from central banks, is the world on the cusp of a significant shift in the way we perceive and rely on traditional financial instruments? And are we prepared for the potential consequences of this changing economic landscape? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.